Hello, folks. So the U.S.-Israel war with Iran is now entering its third week, and the conflict escalated fast. The U.S. and Israeli strikes hammered Iranian missile sites and naval assets and key Iranian facilities, and at the same time, Iran hit back, attacking shipping in the Gulf, targeting energy sites in Qatar and other countries in the same region. Now, and that actually effectively choking the Strait of Hormuz. President Trump declared the fight as like military one, but lashed out at NATO allies, calling them cowards for not helping secure the strait. And he told Netanyahu to pause strikes on Iran's energy fields like South Pars to avoid even worse fallout. Trump today, and during his like a short interview, he said that the U.S. could pull out right now, and it would take Iran 10 years to rebuild their damaged military, but we're staying longer, and if we stay longer, they'll never rebuild. He said that during his interview today, and it doesn't look like so. It doesn't look like there is any like any solution or any ceasefire coming anytime soon. Even the Pentagon wants is asking for another 200 billion to keep going. And according to Pete Hegseth, he said that it takes money to kill the bad guys. So that's why oil is the big story here. Brent crude just peaked nearly to 119 a barrel this week before easing to around $112 like a barrel today, which is up about 40 to 50% from February. So U.S. gasoline also is up about 75 cents a gallon, and Europe and Asia feel it even harder with inflation risk spreading to food, transport, and everything in between. So why isn't the Fed cutting rates to ease the pain? So just 2 days ago, on March 18th, the Fed decided to not cut interest rates, and they kept the federal funds rate at the current range, which is right now we're sitting at 3.5 to 3.75%. And Jerome Powell called higher energy prices uncertain but clearly inflationary. Pre-war, markets were betting that we were going to get 2 to 3 rate cuts in this year in 2026. And now, after the war, the first cut is now it's pushed to September or December, if at all we get any rate cuts, with many expecting just 1/4 point rate cut this year. It's the classic dilemma. So high oil prices fuel inflation, which delays cuts, but prolonged war could actually slow growth and eventually could force the Fed to ease, like to cut interest rates. We'll see what happens, but that's the story for today. I'll see you in the next video. Thank you for watching.